Hey traders and investors, Serge Berger here. Over the course of my trading and investing career, I've learned the importance of following the dollar, and particularly the dollar index, as well as, of course, interest rates. I want to give you guys a little bit of perspective right now where the dollar index is and what that could potentially mean for equities. Because basically, if we can get the direction of the dollar index correct, we tend to have a pretty good chance of getting other asset classes correct as well in terms of directional price movement through, let's call it the medium term lens of a few months or so. So obviously we had more or less a flatlining, or more or less we're at the same spot in the dollar right now, or dollar index, as we were somewhere in the mid 90s, but we've had a lot of gyration in between there. So we had this big rally into the early 2000s, and a big drop off, and then a big surge basically for the past year and a half, so since roughly the summer of 2014. What we're doing though now is basically from a technical perspective, and we'll go through some other stuff here as well. You can see that we've accomplished a major breakout here. For those of you guys who are following these lines and things that we tend to draw for reference points, you'll see this is also technically a fairly sound move that's taken place. If we zoom in a little bit closer though, you can see basically we've been consolidating here in what is so far, until we're proven wrong, another fairly constructive move. It's basically consolidation of a very strong rally that we had here summer 2014 into the March 2015 highs so far. So that's fairly bullish. Now we go in a little bit closer. Let's make this a daily chart so you guys can see this a little bit more close up. And you'll see what we're trying to focus on here is basically the price movement here since March of this year. And we've had a whole bunch of failed attempts to break down, which of course is supportive for the dollar index until it breaks lower. So we're also seeing over the past few trading days basically consolidation, or I should say the past week and a half, 2 weeks or so, consolidation right near the upper end of this line of resistance. And that's, of course, coming into this week with a lot of Fed speakers. We have about 11 or 10 Fed speakers this week, or through the rest of this week. And then, of course, we have a jobs report on Friday, and of course, all of it leading up to a potential December rate hike or not, right? Just the fact that we have a rate hike, we have the FOMC meeting, is probably good enough for the dollar to do something, right? Either we're going to completely reject this entire bullish pattern, or I think we have a pretty good chance of actually starting to break higher. So if the dollar were to break higher from here, I tend to think, particularly if that is doubled down with some sort of Fed bullish rhetoric, and maybe even a rate hike, I would think that's going to be pretty difficult on equities, just because basically they've been rallying on dovish news. So that's the dollar index. Let's look at one more thing, and that is dollar Swissy. If I could type this in correct, you'd see that here we have the Swiss franc which has this massive, crazy rally, or well, it's a sell-off here in dollar terms. It was a rally, but the dollar Swiss is coming to a pretty good spot, and obviously it's not the only currency it looks like, as otherwise the dollar index wouldn't look so bullish. But this one here has actually already broken past a pretty good diagonal resistance line. It's not consolidating above here, so looks kind of similar to the dollar index, not surprisingly, but I think even more bullish in that sense. So keep this in mind, guys. If you can get the dollar correct, and I tend to think the dollar is going to have further upside pressure here, not necessarily in the immediate term, but all these things are kind of looking pretty good. In addition to that, we have these big carry trades that are still out there, particularly in China. If those things have to start getting unwound, then the dollar could really start flying through. I'll call it a 3 to 9 or 12-month lens. But the groundwork for that potential rally is certainly being laid, and has been being laid for the past, let's call it a year and a half or so. So I hope that makes sense, guys. Any questions? Please type it at the bottom of the YouTube video, like the video, and subscribe to my channel, and I'll see you in the next video.